Finding undervalued tech stocks these days feels like searching for buried treasure in Silicon Valley, but right now, there are 3 cheap tech stocks flying under the radar with massive upside: a leader in AI hardware, a digital asset innovator, and a global chip-making powerhouse. These companies are quietly powering the future of technology. And the best part? You don't need to be a Wall Street insider to get in. I'll break down why each is a must-watch, what makes their valuation so compelling, and how they're set to ride the next wave of tech growth. Do me a favor, hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Let's jump straight into the first game changer, a true leader in AI hardware and server solutions. First up is Supermicro Computer, ticker SMCI. This company might not be a household name, but it's quickly becoming one of the most important players in the world of artificial intelligence infrastructure. SMCI is the backbone of the AI revolution, providing high-performance server and storage solutions for the world's most advanced data centers. Their hardware powers the systems that make AI breakthroughs possible, from machine learning to deep neural networks. As companies race to develop AI, demand for SMCI's customizable server hardware is exploding. Every major tech company, from cloud providers to research labs, is scrambling to secure the best infrastructure, and SMCI is right at the center of this gold rush. They build tailor-made systems for Fortune 500 companies and tech giants. Think of them as the behind-the-scenes MVPs of the digital age. Their ability to work closely with clients and deliver exactly what's needed gives them a unique edge. Their growth has been phenomenal, with revenue surging as hyperscale data centers ramp up AI capabilities. The numbers speak for themselves. SMCI's top line has soared as more organizations invest in next-generation computing. Unlike legacy hardware companies, SMCI is nimble, cost-effective, and laser-focused on delivering exactly what the market needs. Their ability to quickly pivot and innovate allows them to stay ahead of industry trends and customer demands. Many investors overlook SMCI because it doesn't have the flashiest brand, but dig deeper and you'll find strong fundamentals, solid balance sheets, healthy cash flow, and a management team that knows how to execute. Their financial discipline is a key reason for their consistent outperformance. The AI boom is just getting started, and SMCI is perfectly positioned to capture a big piece of that pie as enterprises move workloads to the cloud and edge computing takes off. The shift to distributed computing is only accelerating, and SMCI's solutions are at the heart of this transformation. What sets SMCI apart is their relentless focus on customization, building exactly what customers need, which means higher retention and bigger contracts. This customer-first approach has helped them forge long-term relationships and win repeat business. Despite all this, SMCI is still trading at a surprisingly reasonable valuation compared to the broader tech sector. For a company with this kind of growth and market position, it's rare to see such an attractive entry point. That gives investors a rare chance to get in before Wall Street fully wakes up to their potential. As more analysts take notice, the stock could see significant upward momentum. SMCI's recent earnings have consistently beaten expectations, with double-digit revenue growth and expanding profit margins. Their ability to deliver quarter after quarter is a testament to their operational excellence. They're reinvesting in R&D, pushing into new markets, and building strategic partnerships. This forward-thinking approach ensures they're not just keeping up, they're setting the pace for the industry. Of course, the hardware space is competitive, but SMCI's focus on high-value solutions gives them pricing power and a diversified customer base. Their products are trusted by a wide range of industries, from finance to healthcare to cloud computing. Management is disciplined, focused on profitability, and aligned with shareholders, a breath of fresh air in a sector full of hype. Their leadership team has a track record of making smart, strategic decisions that drive long-term value. Is it too late to get in? In my opinion, SMCI still has plenty of room to run as demand for AI infrastructure grows. The market for AI hardware is still in its early innings, and SMCI is well positioned to benefit from this multi-year trend. The rise of edge computing, 5G, and IoT means more data, more processing power, and more need for SMCI's solutions. As these technologies become mainstream, the demand for scalable, efficient hardware will only intensify. Their growth runway is long, exactly what you want in a cheap tech stock. With so many tailwinds, SMCI's story is just beginning. SMCI's culture of innovation stands out. They're not afraid to take risks, adopt new chip architectures, or optimize energy efficiency. Their willingness to experiment and improve keeps them ahead of the curve. Their modular server design means they can ramp up production quickly to meet surges in demand. This flexibility is crucial in a fast-moving industry where timing can make all the difference. That operational flexibility is a major advantage, especially when competitors are bogged down by supply chain issues. SMCI's robust logistics and supply chain management help them deliver on time, even in challenging environments. If you're looking for a play on the AI and cloud boom that isn't already priced to perfection, SMCI deserves your attention. It's a rare opportunity to invest in a company that's both innovative and undervalued. They have strong fundamentals, a compelling growth story, and a valuation that still leaves room for upside. Few companies can check all those boxes in today's overheated tech market. Keep an eye on them, do your own research, and don't be surprised if this quiet leader turns into a breakout star. Sometimes, the best opportunities are the ones flying under the radar. SMCI is a classic example of a company with real potential hiding in plain sight. Their story is just starting to get the recognition it deserves. Their ability to adapt, innovate, and deliver exactly what the market needs makes them a standout in the tech sector. As technology evolves, SMCI's commitment to staying ahead ensures they'll remain a key player. As AI adoption accelerates, SMCI's role will only become more critical. The infrastructure they provide is the foundation for tomorrow's breakthroughs in automation, analytics, and digital transformation. Their customer-centric approach and operational agility set them apart from the competition. In a world where speed and service matter, SMCI consistently delivers. The company sits at a market cap of $29.03 billion, generating earnings per share of $14.25 and trading at a PE of 20.18. Over the last year it delivered $21.97 billion in revenue and $1.04 billion in net income, evidence of solid demand and a business scaling into the AI build-out. For investors seeking growth at a reasonable price, SMCI is a name to watch. The company's blend of innovation, execution, and value is hard to find elsewhere. The next few years could be transformative for this under-the-radar tech powerhouse. As the digital world expands, so does the need for the kind of solutions SMCI provides. Let's move on to our next pick, a company making waves in both digital assets and enterprise analytics. Next up is Strategy Inc., ticker MSTR. This company has become a lightning rod in both the tech and finance worlds, drawing attention from investors, analysts, and crypto enthusiasts alike. MSTR is famous for holding the largest publicly owned Bitcoin treasury, but it's also a pioneer in enterprise analytics and business intelligence. Their dual identity makes them a fascinating case study in how traditional software companies can evolve in the digital age. Their software helps Fortune 1000 companies make sense of their data, and remains a gold standard for top organizations. From retail to healthcare, MicroStrategy's analytics tools are trusted by industry leaders to drive smarter decisions. What makes MSTR unique is their dual strategy, innovating in business analytics while betting big on digital assets, especially Bitcoin. This approach sets them apart from pure-play software firms and pure crypto companies, giving them a foot in both worlds. Their analytics platform empowers companies with real-time insights, predictive modeling, and scalable solutions. Whether it's tracking sales trends or forecasting supply chain needs, MicroStrategy's technology is built for mission-critical applications. In a world drowning in information, that's a value proposition that only gets stronger. As data volumes explode, the need for powerful analytics becomes more urgent for every business. Under CEO Michael Saylor, MSTR has transformed into a hybrid software and digital asset holding firm. Saylor's bold vision and relentless advocacy for Bitcoin have made him a household name in both tech and crypto circles. When Bitcoin prices rise, MSTR's stock often follows, sometimes with even more volatility. This means the company's share price can swing dramatically, offering both risk and reward for investors. If you believe in the long-term future of digital assets, owning MSTR gives you exposure to both a leading analytics business and one of the largest Bitcoin portfolios on the planet. It's a rare combination that's hard to find elsewhere in public markets. Financially, MicroStrategy's software business generates steady revenue, and their Bitcoin holdings have appreciated dramatically during rallies. This dual revenue stream provides a unique blend of stability and explosive growth potential. They've raised capital creatively, issuing convertible debt to buy more Bitcoin while keeping their core business running smoothly. This financial engineering has allowed them to scale their Bitcoin position without sacrificing operational performance. Of course, Bitcoin is volatile, and downturns can impact MSTR's balance sheet. Investors need to be prepared for swings in both the crypto and equity markets. But management is transparent about their long-term vision. They're holding for the long haul and using analytics expertise to manage risk. Their open communication helps build trust with shareholders, even during turbulent times. MSTR stands out for its willingness to think differently and play the long game. Their culture encourages innovation, and they're not afraid to challenge conventional wisdom. They're constantly updating their analytics platform, integrating AI and machine learning, and expanding internationally. This commitment to R&D ensures they stay ahead of the curve in a rapidly evolving tech landscape. From a valuation standpoint, MSTR is trading at a discount compared to its historical averages, largely due to uncertainty about the Bitcoin component. For value-oriented investors, this could represent a compelling entry point. If you see digital assets as a long-term growth engine, this could be a classic case of the market underestimating future potential. The convergence of data analytics and digital assets could unlock new business models and revenue streams. 𝗗𝗟𝗧, the CEO, is one of the largest shareholders, showing real alignment with investors. His personal stake in the company signals confidence in the strategy and a commitment to shareholder value. If you're comfortable with some volatility and believe in the future of both enterprise analytics and digital assets, MSTR could offer serious upside. It's a play for those who want to be at the intersection of two transformative trends. In a tech landscape crowded with copycats, MSTR stands out for its originality. Their willingness to take calculated risks has set them apart from the competition. They're not just following trends, they're creating them, both in software and finance. Their leadership in both arenas is shaping the future of digital business. MSTR gives you direct exposure to two of the most important trends of the next decade: data and digital assets. Few companies are as well positioned to benefit from the convergence of these forces. Strategy comes in with a market cap of $82.88 billion. It posts EPS of $14.25 with the same 20.18 price-to-earnings multiple, while reporting $463.45 million in 2024 revenue and $1.16 billion in net income. Those headline numbers highlight a company investors are valuing at a premium with profitability metrics that stand out against its current top line. If you want a unique, high-conviction play with asymmetric upside, don't overlook this one. The combination of innovation, leadership, and bold strategy makes MSTR a stock to watch. Just make sure you're comfortable with the risks before you jump in. As with any investment, due diligence and a clear understanding of your risk tolerance are essential. MSTR's bold strategy could pay off big for patient investors. For those willing to ride out the volatility, the rewards could be substantial. Now, let's turn to our final pick, a titan in global chip manufacturing. Here's why Taiwan Semiconductor is a must-watch. Finally, let's talk about Taiwan Semiconductor Manufacturing, ticker TSM. This company is often called the crown jewel of the global semiconductor industry, and for good reason. TSM is the world's largest and most advanced semiconductor foundry, producing chips for Apple, Nvidia, Qualcomm, and more. Their factories are filled with cutting-edge equipment, running 24/7 to meet the insatiable demand for high-performance chips. If you own a smartphone, game console, or laptop, odds are there's a TSM-made chip inside. Their technology powers the devices we use every day, often without us even realizing it. Their dominance in advanced chip production is unmatched, manufacturing at 7, 5, and even 3 nanometers years ahead of most competitors. These tiny transistors enable faster, more efficient electronics, and TSM is the only foundry producing them at scale. Demand for high-performance chips is accelerating, driven by AI, 5G, autonomous vehicles, and IoT. Every new wave of technology needs more powerful, more efficient chips, and TSM is at the center of it all. TSM's role becomes even more critical as companies push the limits of what's possible. Their engineers are constantly innovating, working to shrink transistors and boost performance. Financially, TSM is a juggernaut. Revenues in the tens of billions, robust profit margins, and resilience through global supply chain challenges. Even during industry downturns, they remain profitable and continue to invest in growth. They invest billions in R&D, staying several steps ahead of the competition. This relentless focus on innovation is what keeps them at the top of the industry. The pace of global tech progress depends in large part on TSM's ability to deliver. Their chips are the backbone of everything from smartphones to supercomputers. Despite their dominance, TSM is still trading at a reasonable valuation compared to other tech giants. For investors, that's a rare opportunity in such a critical sector. The market has priced in some risks, like geopolitical uncertainty, but if you believe in long-term semiconductor demand, TSM has room to grow. The world's appetite for chips is only increasing. TSM's business model is resilient. They're the trusted partner enabling innovation across the industry, not a direct competitor to their customers. This unique position gives them a strategic advantage. That means steady, recurring revenue, and deep, long-term relationships with the world's top tech companies. Their customers rely on TSM for their most advanced products. Sure, TSM faces challenges, geopolitical tensions, supply chain disruptions, and massive capital investment needs. The stakes are high, but so are the rewards. But their technological moat is so wide that even well-funded rivals struggle to catch up. Years of expertise and billions in investment can't be replicated overnight. They're diversifying manufacturing outside Taiwan to mitigate geopolitical risks. New fabs in the US and other countries are part of their global strategy. TSM is also committed to sustainability, investing in green manufacturing and energy efficiency. They're working to reduce their environmental impact as they grow. Taiwan's semiconductor manufacturing commands a massive $153 trillion market cap. EPS lands at $9.07 with a PE of 32.85, underscoring the market's conviction in its moat and growth trajectory. For 2024, TSMC reported 2.89 trillion new Taiwan dollars in revenue and 1.15 trillion TWD in net income, a scale that reflects its central role in advanced chip manufacturing. Together, these names map the spectrum from specialized AI hardware to global foundry dominance, showing where investors are placing their biggest bets in the compute cycle. For long-term investors, that's a big plus. Companies with strong ESG practices are increasingly favored by global capital. TSM is positioned to benefit from the biggest trends in tech over the next decade. AI, edge computing, 5G, and even quantum computing. Their chips will be at the heart of tomorrow's breakthroughs. Their pipeline is stacked and analysts project strong growth ahead. The company's future looks as bright as ever. Their customer base includes Apple, AMD, Nvidia, and Qualcomm, the companies driving the next wave of tech innovation. These partnerships are a testament to TSM's reputation and reliability. While the semiconductor industry can be cyclical, TSM's leadership gives them stability and predictability. Their management team has steered the company through decades of change. They're not just riding the wave, they're shaping the industry. TSM sets the pace for global innovation. Relative to their growth prospects and industry leadership, TSM is a bargain. Few companies offer this combination of scale, innovation, and value. The market's uncertainty gives long-term investors a chance to buy a world-class company at a discount. Opportunities like this don't come around often. TSM is a critical pillar of the global tech supply chain. Without their chips, the world's most important technologies would stall. Without them, the pace of innovation would grind to a halt. The ripple effects would be felt across every industry, from automotive to healthcare. If you want exposure to the future of technology, TSM is a stock you need to have on your watch list. It's a gateway to the next era of digital transformation. Their scale, innovation, and financial strength are almost unmatched in tech. TSM isn't just a company. They're the engine powering the digital world. There you have it. 3 cheap tech stocks shaping the future of AI, digital assets, and global chip manufacturing: supermicrocomputer, MicroStrategy, and Taiwan Semiconductor. Each offers a unique way to play the biggest trends in technology, and the market hasn't fully caught on to their long-term potential. If you're ready to invest for the next decade, these are the kinds of opportunities that can make a real difference in your portfolio. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Want exclusive stock tips and in-depth analysis? Join the Stocks Galore Patreon. Link in the description. Which of these 3 companies do you think has the most upside over the next 5 years? Drop your thoughts in the comments below. Don't forget to like, subscribe, and I'll see you in the next one.